Welcome to today's Did You Know video. Today we're going to discuss the answer to a question that I get from a lot of clients. That is, how can I buy and sell at the same time without losing my mind? Because that's often what happens when you're trying to do the most common scenario out there, the simultaneous transactions. So that's where you spend a month doing the two simultaneously. Then you close on your existing home in the morning. You use those proceeds to close in the afternoon on the new house. Or it can be a day or two later. And at some point in there, you're supposed to move. So it can be a real time crunch. It can be stressful trying to do both of those at the same time. But it also works for a lot of people, and it's why it's the most popular one out there. But I want to let you know that there are some other alternatives. So depending on your particular financial situation and what would be convenient for you or your family, and whether you have a job transfer situation, there are other things out there that could work better for you. And I'm just going to briefly describe several of them. I'm not going to go too in depth with the pros and cons and the description of each, but I just want to make a brief video about what those options are. So to jump into it, the next option besides doing the simultaneous transaction is to sell your existing house first. Obviously, the biggest drawback to this is that it works, you don't find a replacement property, and then you don't have anywhere to go. So you don't want to end up without a house, but this is often a really good idea if you don't know what the current market conditions are going to be, and you're not sure how your home sale is going to react to those market conditions, if you're uncomfortable with how much you're going to get as a return on the sale of your property, and you don't want to make an offer on a new house until you're very comfortable with exactly what that financial picture looks like, then this could be a great option. And you can do this a few different ways, and it doesn't mean selling and then not having anywhere to go. So the first way is just to make a really long settlement period. So instead of our typical 30-day period that we usually use that lets us get the appraisal, the inspection, and the loan done in a certain amount of time, you could go to 45 days. You could even go to 60 days. So if the buyer is willing to do that and it's convenient for them as well, then stretching that time period out and still getting all of those deadlines done up front, so then you know you're heading to closing and it's going to sell for a certain amount, and you can start to visualize what that financial picture looks like to be able to be comfortable putting an offer on a new house. Alternatively, another way to do this is to go ahead and close in, say, that 30-day period, but then do a lease back. In the state of Colorado, it's what we call the post-closing occupancy agreement. And you can do under 60 days as a tenant in your own house. So your buyer becomes your landlord after you close. But that allows you to close in the normal amount of time, so you already have the cash in the bank, you know exactly what your proceeds from the sale are going to be, but then you can spend up to 60 days finding that replacement property and then using those funds as a down payment and moving at your leisure instead of having it be such a crunch period. You just want to make sure you negotiate all of those leaseback terms up front when you first go into contract, so that you're not trying to do some negotiations later down the road. The third option is to just go ahead and bite the bullet and do a long-term or a short-term lease. So this is an option I often recommend to people that are being relocated and they're moving here from out of state. Go ahead and get used to your surroundings. Figure out what neighborhoods you like. Figure out what school you like. Figure out what your commute is going to look like. Don't commit to buying a house sight unseen or after one weekend trip just because you're selling your old house. If you know the area well, then by all means go ahead and jump into it. But there are a lot of short-term lease options out there, and even if you did a 6-month lease, you'd probably be better off in the long run getting a practice run on your new surroundings and being comfortable with a new purchase, rather than buying something that you end up not liking because it's very expensive to sell a house. So those are your options on selling first. So your next option can be to buy first. And this one, just like the sell first, can also be a little scary because you might end up with 2 mortgage payments at the same time. So we hope that that's not the case, but here's how this buying first can really be convenient, especially for a family with young kids, or if you're moving from out of state and you'd like to have that time to be able to move without having everything need to be done in the same day. So your first option with buying first is that you can possibly financially qualify to carry both mortgages at the same time. You may not want to, but if you can qualify for it, then you can go ahead and purchase the new home without placing a contingent offer And after you've moved in, you can put the other one on the market, or you can put it on the market at any point while you're under contract on the new house. The second option is to do a bridge loan. So if you don't have the funds available, as in the first example, to go ahead and use as a down payment on a new house, you can use a bridge loan, which is a loan that's temporary that you put on your existing house that takes the equity in your existing house, and you use that in a bridge loan to apply as the down payment on the new purchase. The way that the bridge loan is kind of nice is that you still just qualify for the 2 mortgages, not for all 3 loans, because the bridge loan usually doesn't apply to your debt to income ratio. So if you can just still do these 2, but you don't have the funds for a down payment, that's how you can get that done. And then when you sell your existing house, you can pay off the bridge loan. The drawback with the bridge loan is that it can be a little expensive. So if the convenience is that worth it to you, that you don't mind spending $1,500 to $2,500 in closing costs to get that done, then it can really be a lifesaver as far as time and stress goes. Alternatively, you can do a home equity loan on your existing house instead of a bridge loan. The issue with that is that usually all 3 of those loans then apply to your debt to income ratio, so it's a little harder to qualify for that. If you don't want to do that, then your next option is to do a retirement loan. And a lot of people don't realize how easy these are to do. If you have a 401k, a 403b, a 401a, you can check with your plan administrator, and most of the time you're allowed to take 50% of the funds that are in that account and apply them towards a home mortgage. So what you can do is go ahead and pull that out. The nice thing is that you're loaning yourself your money, so it doesn't do anything to your debt to income ratio. You get that loan, you deposit it into your bank, and then you use that as your down payment on the new house. Pretty quickly, you have to start paying yourself the loan payments on those retirement loans, but the interest that's being charged is actually to yourself. So as you're paying that back into the retirement account, the interest is being added into your pile. And if you close on your existing house, you can repay all of that and stop paying it and then put the money right back into the market. The nice thing about doing those retirement loans right now is that the market conditions are pretty favorable. The market's really high, there's not a lot of risk of taking your funds out, putting it in a month later, and missing out on any sort of big upturns. So those are your basic ideas of how you can buy and sell at the same time without losing your mind. If you have any questions, I have a really handy sheet that I can send to you. Just shoot me an email or give me a call, and I'd be happy to share that with you or answer any specific questions about how each of these actually work in practice and what might be the best solution for you. So thank you for tuning in to today's Did You Know video.